Is it worth it for people to go ahead and get into real estate right now, even though the interest rates are higher, right? Is it worth it to pay those higher interest rates on your monthly payments in order, because it's likely going to keep going up after a while because nobody's doing it right now?
Yeah, I think a couple things when you're looking at getting into this market, especially new people, since interest rates are so high, you should probably focus on the lower end of the market. So markets that have more homes in the 300,000 and below than the 500,000 to $1 million, because affordability is going to be a factor if you're flipping, because someone has to be able to afford and buy that house. We have a very good inventory shortage for us as investors out there. There's still a huge amount of homes. I think at the beginning of the year, Realtor.com had a stat that 4 million units need to be built just to hit the current demand. And there's growing demand because there's less homes being sold. So there's still people out there looking. So if you're in a good price point and you have a good product, it's going to sell. Number two is, especially since you're fixing up properties and you have a nice fixed up property on this market and you're competing against people who are trying to sell and not fixing them up, you're more likely to sell. Interest rates will be a factor. If you can find rental properties that at least break even or make a little bit of money in this market with the higher interest rates, when interest rates come down, who knows what that'll be? The Fed keeps messing with things. It could be 18 months, it could be 2 years from now. But when they go back down and you're able to refinance, your cash flow is going to go way up again. And guess what happens when interest rates go down? More people jump back into the market. So there's a lot of people right now sitting on the sideline, not going to buy that first house, not going to move up or do anything else like that because interest rates are just too high. People get used to seeing, 8s and 9s and interest rates out there, and then they come down to 5s. People are going to jump back into the market. So somewhere down the line, 18 months, 2 years from now, when interest rates go back down, or hopefully sooner, you know what that means? If you're buying now, more people flooding the market. Typically when more people come in, home prices go up, or anything goes up. Any kind of product goes up when there's a bunch of people wanting that product. So that's what's going to happen. So if you could buy now and you can at least break even, when you go to refinance, your property is going to be worth more because there's more people coming in. This is typically how markets work. There's less people out there now, so home prices will come down. When rates come down, more affordability, people jump back in, millions of people coming, hundreds of thousands of people coming back in. Home prices are going to go up. You own a rental property, it's breaking even. You get to refinance into a lower interest rate in the coming years. That's going to increase your cash flow. The value is going to go up, so you're creating more wealth for your future you too. And rents are going to keep going up. At least in most markets, rents, cost of living are going to go up. You have a fixed number on your mortgage right now. If you just refinance it and it keeps going down, you refinance it in a couple of years, your balance stays the same, but rents are going to go up. Just get a lower interest rate and your value goes up. You've created wealth and more income. So it is a great time to jump in, because if you could buy something low and make it work now when rates go back down, you're creating that income and that wealth by taking that jump right now. This is the time for all of those people who are doing this to jump in and look at it, but do it correctly.
Yeah, it makes sense that the budgeting and cash flowing would be of prime importance, because it's exactly the thing that people don't want to do, which is worry about higher interest rates or worry about more of a monthly payment. But at the end of the day, like when I'm thinking about the math, if a few years ago when people were going 100K to 200K over asking was insanity, that's so much more money. Even though interest rate's a lot of money, people think that they're, being smart by avoiding the higher interest rates, but it's smarter to avoid, the prices being 200 more than they are now. Is what I'm kind of hearing. Is that right?
Well, yeah, just look at if you buy a property right now, let's just throw some numbers out there. You buy a property that you get for $200,000. And in this market, it's only worth $250,000, right?
Okay.
And then let's just take the opposite approach. Someone who bought that property 2 or 3 years ago and paid an extra $100,000, and maybe you could buy it for $250,000 now, and they bought it for $300,000 or $350,000 because they overpaid for it, right?
Yeah.
So right now they're upside down. You as a new buyer coming in, I'm buying it at a good number because the markets have come down. 2 years from now, let's say both of these properties go up to 3.25 or $350,000. They're just back to zero equity. You have just created some equity. Your loan is smaller. You're going to pay it off, but your values are the same because you bought lower. Your costs are still there. Their mortgage could be $300,000 or $350,000, and yours is maybe, $250,000.
Right.
Over time, you're going to win that game by buying at the right time.
That's so interesting because I hear people saying, stay out of the market right now.
Yeah.
but that conventional wisdom is not really very wise. That's what I'm hearing. In terms of if you're willing to do the work, it's not wise. Maybe it is wise if you're not willing to do the work and do your numbers up front. But if you know that you cash flow, it sounds like getting in while everybody's running away is the right way to go.
Buying good markets, buy good properties. When I say good properties, don't buy stuff on corners where they're busy or busy streets. In these times, buy good properties on cul-de-sacs near parks. Buy what you can in growing markets. There's markets where the cities do better than the suburbs. There's other places where suburbs do better than they're growing at a faster rate. So buy where you know that people still will want to go in your community and grow with it. Like I said, I remember the Greens and some of these people back in 2010 who were buying just because they're like, we've gone through this before. They were a little older than I was at that time. And they're like, we've gone through this before. We know when this time comes, you buy. Because the conventional wisdom out there is credit card debt is at the highest. This is at the high. All of the negative out there keeps more people out of the market. That just means less people trying to buy a property.
Yeah.
So the people who are trying to sell it have to work with you a little bit more. There has to be some better deals. We are seeing better deals, not all the time, but a lot better deals now than we've seen, over the last couple of years, because more and more people have that fear and they're just like, I just want to get rid of it before anything else gets worse. I just inherited this. So I just want to get rid of it. So as long as the sellers have that fear and they hear it in the market, the people who are level-headed, buying right, they're going to do really well. Part of this whole thing about 2024 too is just understanding, because there's been a whole generation of real estate investors and investors who have gone through some really good times with money, meaning banks, lenders, fintech, they're all out there. Everyone is trying to give you more money. And what the Fed has done is said, we're going to slow that down. So this huge pool just got a lot smaller. There's going to be less people who qualify to use other people's money, banks' money. There's going to be less people qualified in this market than in other markets too. Part of why some real estate investors are probably moving out is they may not have the credit, the income or whatever to even get a loan in this new market. Coming in as an investor in this market, you have to make sure you're set up to qualify, because since this pool is smaller, this amount of money out there is smaller, you're going to have to stand out more to the lenders. You're going to have more money in. You're going to have to work as we call your buckets of money. What do you bring to the table when you're talking to someone who's going to give you money to invest? Because real estate investing is all about using other people's money to create wealth with a little bit of yours or none of yours. So
that makes sense.
There's going to be less real estate investors out there. There's going to be less money out there, but there's going to be more deals. The percentage of more deals, we'll see what happens. There's going to be areas where foreclosures are higher than others, but there's still going to be more deals. That's what we see in 2024 than we have in the last 5 or 6 years. More deals with better margins.